I have 3 ways in this video to identify exactly how an asset is trading, whether that's crypto, forex or stocks. The techniques are the same. If you can identify these, honestly, you'll be ahead of most retail traders straight away because you'll actually know if it's a good idea or not to open your trade. Hey guys, James here. In this video, I'll show you how to identify the trend in your chosen asset and where the price might actually go to so you can go ahead and be confident about your trades. We can use some of the easiest indicators and techniques to quickly identify whether or not we should trade or maybe wait for a better setup. Timestamps are in the description if you need them. Firstly then, let's come to the trend, identifying the trend of what you're trading. And any trader will have to identify what the trend is in the asset that they're trading before entering into any trades. Of course, there can be uptrends and downtrends. That is really a period in time where the price generally is either moving up, down, or possibly sideways as well. Without knowing the trend, we really can't place any bets on it. So as you can see here, this is the Bitcoin US dollar chart, and we can see the price moving up and down, but we don't really know if there is a specific trend right here because we don't have any context. Nothing is really telling us how the price is moving in relation to other time frames and the price previous to what we're actually looking at. So when it comes to identifying the trend, there's actually just a really easy way to do this overall. We can actually use the simple moving average or another type of moving average to tell us how the price now is in relation to how it has been previously. Why do we want to do this? Well, as you can see, beginners may want to only trade with the trend because it may increase the probability of a profitable trade. That's not to say that you can't trade against the trend though, and a lot of people do actually do this. There are specific strategies. If you are a longer term trader and you think that actually the outlook over the longer term for an asset is bullish, but the shorter term trend is actually to the downside, that could potentially be an opportunity for you to buy in and then actually get out at a much later date. So actually with trend trading, it really does depend on your personal timescale and your outlook as an investor. But when it comes to day trading, trading with the trend is usually something that beginners would do just to keep things simple overall. So how can we take something like this, which is just a collection of prices, and turn it into a trend? We can come down to something like the 200-day simple moving average. This is usually known as a long-term trend indicator. So what we can do is put that on the chart and it will simply tell us objectively what the trend is. When it comes to shorter term trends, this again is going to depend on what type of trader you are. But if you're trading on the day chart, I'll come back to the chart here. The day chart is, as you can see up here, just what I'm looking at now. So each candlestick right now represents a day of trading. I can change this. If I'm a day trader or a scalper, I may actually go down to the 15-minute, the 5-minute, even lower type of chart. But right now, each candlestick represents a day. And if you're trying to swing trade, or if you're just trying to get into an asset at a better time because you are a medium to long-term holder, then using something like the 50 or 99 day is going to be great as well. If you're scalping or day trading and you want to get in and out within a couple of days and you're using maybe a 1-hour chart, you can use these as well, because what happens is that when you change the chart, this doesn't become a 200-day moving average, but actually becomes a 200-period moving average. Essentially what you're doing is taking 200 periods and then having a simple moving average. So let's go and put that on the chart right now. I can come up to indicators. If you don't have the simple moving average on, just type in MA and you'll get a moving average. I have them on the chart already, so I'm just going to take them off hide and show them right here. We have a white line and a yellow line. The yellow line is the 50-period moving average. In this case, it is 1 day, so a 50-day moving average because we're on the day chart. And then the 200 is a 200-day. How can we now identify the trend then? Very simply, if the price is above the 200-day moving average, most traders will use this as a sign to only go long because the shorter term trend is above the 200-period moving average. And so potentially that would be in an upswing or bullish territory overall. So anything above the 200-day, this white line would be considered bullish. Anything below the 200-day would be considered bearish. There are many opportunities, of course. For example, if you get in at a price that is below the 200-day, you could ride that move up past the 200-day. So strategies like this definitely aren't fixed in stone, but in general, a price that is above the 200-day is considered more bullish because the shorter term trend is actually above the longer term 200-day trend. You can see on this chart, actually the 50-day is moving up and down over and below the 200-day. So we'll get into why that might be important now. We're taking another look at the Bitcoin US dollar chart here, and it's very, very easy to see the trend right now. If these lines weren't on here, you would see that the chart was going up. However, if this white 200-day moving average was actually above the prices on the chart, then we might suggest that the price is actually recovering from a fall or a downtrend because that price is now trying to move back up above the 200. Right now, it's way above the 200. This is the candlestick right here is way above the 200. So we know from start to finish, this is just in a really bullish trend overall. Not only is it above the 200, but it's above the 50 at every point as well, telling us that short term, this thing is just completely bullish. It's way to the upside. There are buyers coming in and the price is moving up considerably, both longer term and shorter term. As a trader then, what are you going to do? You can see right here that there is actually what you could potentially call a downtrend right here because the price moves from a higher to a lower point. Is that actually a downtrend though? Well, no, not really, because we can still see the 200-day and the 50-day moving average. They are both below the price, meaning that even though we're seeing a slight pullback or a slight mini sell-off or a reversion towards the 50-day moving average, this would not be considered a downtrend because the 50 and 200 are still both below the price at all points. There is also another pullback right here, as you can see. Again, this wouldn't be considered a downtrend because the 50 and 200 are below the price. The price, even though it's coming off from a very bullish move, is still in an uptrend overall because it's above the 50-day, and right here as well. Another pullback, but certainly still an uptrend. It's still above the 50-day. This is why moving averages are so important because it smooths out these different moves. You get some up moves, you get some down moves, but it shows us overall, we can see the yellow line, it's definitely in an uptrend. Definitely all the way, this would be an uptrend. These pullbacks are potential entry points if you believe that the uptrend will continue over time. Can we identify the trend here? Well, certainly at the start, it's definitely in a huge up move. And then we get this sell-off right here going down towards lower prices. But as we can see when we put the 250-day moving average on, this is actually a really simple way of potentially entering into trades. And I want to highlight this area right here. What does this show us? Using two of the simplest indicators, the moving averages, we can see what's called a bullish crossover. That is when the 50 period moving average, in this case, it's a 1 day, so the 50-day moving average, it actually moves up from below the 200 through the 200, going up above the 200. So this would be known as a bullish crossover. The short-term trend has gone from below the 200 to above the 200. So it's obviously bullish. This is telling us that the short-term trend is that buyers are coming in and pushing the price up. And we get this crossover here. This is a potential entry point for a trade. We would want to ride this move over the short term up in this bullish way. Where would our exit point be though? Where would we put in a trade? And I've gone through in other videos lots of different ways to identify exit points, but let's just keep on with the 50-day moving average. So we've actually ridden this move up. Where would we exit? Well, there are two different ways. Firstly, you can wait for the actual price of the asset to move down to the 200-day moving average again, which it did right here. There was a really steep sell-off, and you can say if the price itself of the asset moves to the 200-day, I'm out. Another option is to wait actually for the moving average to move back through. So we see the 50 period moving back through the 200 period. Again, that could be an exit point for you. Exit points don't have to be exact though. You can just draw really an area on the chart, and I would possibly get out at any point here if you've ridden the move up. And we can see the short-term trend with the 50 period moving average moving way down, looking like it's going to come back into the 50-day. So at any point here, whether the price of the asset or the 50-day moves through the 200, you could potentially say this mini move is over, and potentially that would be my exit. And you can actually see right here as well, this is definitely still in an uptrend overall, but we have the exact same setup coming into the right hand side of the chart. And you can see the 50 period moves up above the 200 period. So Is that going to be another bullish move where we can win? Well, you can actually see that it doesn't happen this time. The 50 period moves up, the price moves up, but what happens is that this move doesn't really materialize and it meets some selling right here. And so the move actually quickly falls away. We would have actually lost this trade if we would have gone into it again. That is why it's so important to put stop losses in place when you are day trading or swing trading like this. And so potentially you would go in, you would lose a couple of percent or maybe 5, 10%, whatever your stop loss is on the trade. But obviously with this move here, we literally doubled our money. It went from around 4,500 and we would have got out around 9,000. So that is why it's so important to put stop losses on your trades when you are day or swing trading. The next type of chart pattern that you must consider is consolidation. Consolidation is when the price of an asset moves in a range-bound way. What that means is that it doesn't really go up or down, but it trades within a specific range. And actually, traders really do like consolidation because it gives us a lot of data, and eventually prices do break out of consolidation. As you can see here, consolidation provides good entry points and stop loss levels. What does that actually mean? Well, we can come to a chart again, but essentially if you have a lot of trade around an area and around a price level, then that can give you a lot of confidence of putting in trades. And you may want to put a stop loss level at a little bit below the point of consolidation and then hope for a move out of consolidation, either to the upside or downside, whichever way that you think the price may move. With consolidation, there are no hard and fast rules about how long it can occur for before it's actually called a consolidation. If you're looking at the one-day chart, this may be a couple of days to maybe 10 days, 15 days. We can have a look at some examples though. Consolidation is relative and has no set volatility. Again, I'll explain that when we look at the chart. The consolidation in this chart hopefully jumps out at you. In the middle right here, you can see a range-bound price. You can see that the price over a very long time period actually doesn't move that much in relative terms. It may move a few percent on a given day, and we can actually just put this box on here and say, this is a consolidation in the price. We have this blue line, which is the 50 period moving average. We're on the one-day chart, so it's the one day, and you can see definitely a consolidation above the 50-day moving average here. This is the Cardano price. This is a cryptocurrency, so ADA versus US dollar. And during this time frame, there was a lot going on with ADA. There were a lot of upgrades coming with the blockchain. And this can be seen as a really strong move because what it essentially tells us is that buyers and sellers are not winning. There is almost equilibrium between the two. This gives us a lot of confidence that this price level, when you can see it's around $1.30, is actually a very strong price level for traders. That means the vast majority of traders are willing to trade around this price, and that gives us a lot of support for this price level. So $1.30 would be considered a very strong support level. If you in fact wanted to go long at this level, you thought overall that yes, this is a bullish time for Cardano, there's a lot of news coming out, this is a great level to get in at because $1.30 is a strong support level, and you can put your stop loss at a level below this price because we can be fairly certain entering into a trade that buyers and sellers are actually meeting here. The 50 period moving average is in an uptrend. As you can see, it is moving up. And when a breakout occurs, either to the up or downside, we can get in now, having a lot of this price data, and then ride out that trade. In this instance, it did break out of this consolidation to the upside, and that run continued. If we were going to bet that the price of ADA would fall and you want to go short, then you can sell into this consolidation, put your stop loss just above the consolidation, and then potentially ride it down, and you would obviously get stopped out on that occasion. But having this consolidation, we know that there is a lot of trade around here. And so this is an area where you can be confident that it will break out from. And you can also be confident that your stop loss isn't going to be triggered during this consolidation, but on the next phase of the market. The next thing you need to do when looking at charts before trading is to look at support and resistance in the price. This is something that professional traders will always look at. And when I was on the phone to clients, they would always ask me, where do I think the price is going to go? And you can only reference previous examples of both support and resistance in the price. Prices can move quickly through certain price levels, but they always come to a range where trade can consolidate, like we've just seen consolidation. Those areas where there is consolidation and a lot of trading within a narrow price range, those prices are where traders look at as really islands of safety amongst other big moves in the market. So what is support? Well, support prevents the price going lower. So if the price is coming down, then you will look for levels of support, a support level where the sell-off or the move down potentially stops, so the asset gets support. Resistance, this is literally preventing the price from going higher. So there are levels where the price can actually move up, and then at a specific price, it meets with resistance and falls off away from that price. Levels of support and resistance are quite fluid though. For example, when a price does actually break through resistance, that very resistance price can actually turn into a support price. Support and resistance does often come at significant price levels as well. So for example, Bitcoin, when it was trading around 1 trillion, that was definitely a resistance level to get over 1 trillion. Humans do like round numbers when we trade, and so 1 trillion is obviously a price that we would put importance on. It didn't really break through it, and then when it did, it shot right through it, and that 1 trillion became support for a little while. Like I said, support and resistance are fluid and they always change. As we can come to the Bitcoin US dollar chart, where is the support and resistance here? Well, we can see a huge uptrend as we can see the price of Bitcoin moving way above both the 250 period moving averages. Can it do this forever? Can a price of an asset just go up literally forever in perpetuity? That is obviously not going to happen. There will be some areas where the price will fall off. When that does happen, where is it going to go? If you're in Bitcoin or any other asset and you're seeing a sell-off right now, where exactly is that price going to go to? How big is the move going to be? Where are certain levels of the price that we can hang our hat on and say it may actually get support at this price if it's on the downside, or resistance at a price when it's on the upside? Let's put a line in here. Can you see how this area is definitely turned into an area of support? Why is that? We can see that on a number of occasions, the price came down and it actually met support here. So certainly on these two candlesticks, you can definitely see that the price tried to go below this level, but it just didn't do it. And again, right here, we can see 2 days of trading where the price comes down to this level, but doesn't go below it. This would be considered an area of support as the price is coming down. Why is that? Well, you can just follow the line right here and you can see that actually previously this price level was an area of resistance. We can see 1, 2, 3, 4, 5, 6, 7, and probably 8, 9, and even 10 days where the price was trying to break through this level. Buyers were coming in time and time again, and sellers were stopping them go through this price level. But as you can see, the price broke through it and it just shot right through it. Now to the downside, we're seeing this previous resistance turn into an area of support, at least over the week or so of this trading right here. That's not to say that the price can't break through it. And then you're looking at another area of resistance and support previously that could potentially act as an area of support in this case. We can also look on the chart for other areas though. You can definitely see that this was an area of support before. The price came down a couple of times during this trading range and definitely found support at this price level. So if the price does keep moving down, I would say this is another area of support, and this is around 30,000. Again, it's a round number that humans like to trade at. If we keep drawing these areas of support and resistance on the chart, you can see one right here. When the price was moving up, you can see that this was definitely an area of support right here. We have about 5 to 10 trading days where there was a consolidation and sellers were trying to come in a couple of times, but it never really went below this price level. When sellers did win and actually push the price right down, we can also see that this previous level of support has now at this point turned into a level of resistance. Buyers are coming in trying to force the price up, but not getting it above this level in the price at all. So previous support turns into resistance now. This is an area where you could possibly enter into some trades. If you can see now that the price has moved through the 50-day moving average, and as we know, we may want to only go short when the price is below the 50 or 200 day, depending on your strategy. So certainly the 50 period moving average acted as support and now is acting as resistance as the trend changes. And we can definitely see the trend has changed. That is not a subjective opinion. It is objective fact because the price is moving below these moving averages, both the 50 and now the 200. This now is in a downtrend, if this is how you identify downtrends, of course. Then we go to this level as well, and you can see definitely previously in the chart, we had resistance right here. Then we had another area of resistance right here. That resistance turned into a level of support at this price, intraday trading. Then we had at this level, again, support for the price. It bounced off here. You can see that once more, this price level was a huge significant price level, because even though we had this huge dump in the price and that bad news, there were a couple of days where traders stepped in and bought the dip. They tried to level off trading at this significant price level, but after a few days they failed, and then it moved right down to the next real significant area of value, which is this price level that saw a huge amount of trade previously. So let's recap on the 3 really important chart patterns to know before trading. Firstly, you can identify the trend objectively by using a moving average. You can really choose the moving averages yourself, but a lot of people do use the 200 period moving average as the longer term average. And then you can use the 99, 50, even 20 period moving average for your short term trends. Some traders will only trade with the trend and not against it. And as we've seen through the video, that decision is made for you by whether or not the asset you're trading is above or below the 200 period moving average. Consolidation is also something to look for when trading. It gives traders a lot of data around a price level and makes that price level significant, meaning that you can input trades with more confidence. You can look for consolidation as an entry point before the next move up in the market, and you can set your stop loss at a price a little bit away from the consolidation. Support and resistance is also key to know. It gives a trader clearly defined price levels that the trade will often be attracted to. So when there are big moves in the price like we've seen, you can look for those previous levels of support and resistance and consolidation, and look for those as areas where the trade might be attracted to into the future. If you do want to check out the charting software that I used for this video, I'll leave the link to TradingView in the description, alongside Binance if you want to go ahead and start trading cryptocurrencies. I'll leave some other very helpful videos in the description for you as well. Do subscribe for helpful daily crypto content, and I'll see you in the next one.